Hello everyone, welcome to my YouTube channel. Andre Cardoso, professional trader and a global markets analyst, and I'm here today to share with you one specific symptom related to divergence and its hidden divergence inside the market. So we usually try to search for bullish or bearish divergence between the price and a specific indicator I use for this example. I will use my default indicator, that is RSI, relative strength index, and I use also the MACD when I when I check when I see an harmonic pattern or an advanced pattern formation. I like to to get notions of the wave structures, and I like to use the MACD indicator, but the video is not related to that particular indicator, but it's actually related to RSI. So let's try to dissecate this market. This is euro dollar on a daily. I will change this into a 12-hour chart just to get more information to provide you. So let's jump into these structural lows and let's use this new capability inside TradingView, that is the replay option, that allow us to push back the price into this zone here. Okay. So let's what is actually bullish and bearish divergence and what is hidden divergence. Okay, some of you are already familiar with bullish or bearish divergence. We will use the example for the bullish divergence because this is a bearish market, and we will try to search for opportunities to buy the market once the market offers that opportunity. So what we try to search, and let's go just a little bit, just a bit back before this bottom formation here. So let's go here. So once the market, note that we have here the market entering on overbought conditions, oversold conditions, I'm sorry. So the market is actually entered extremely on extremely oversold conditions. So, and the market is starting to print some bullish divergences, not clear because we have not this bottom. First of all, is not in the for me it's not in an extremely oversold condition. I'm not saying the market will not pull back on those conditions, but my criteria require if I can search for opportunities with both bottoms on oversold conditions, and note that we are starting, we have a breakout of the previous structure here. So actually this is the first part, or the first let's say that the first impulse below the breakout. So let's try to identify this moment here. So we have this bearish structure forged here. We can adjust it a little bit, the close prices if you wish. Well, we have this bearish structure, we can call it flag or triangle or whatever you want to call it, but you identify the structure. We have a breakout, and this is the first part of the breakout, and we have entered on oversold territory. Okay, let's try to keep moving. So what happened here, once the market has printed bullish divergence, so because we have two bottoms here. 1, 2, 1, 2. So we have bullish divergence between those bottoms. The market decided to come to test this previous broken structure, as usually the market will violate this structure, and it can test in the different ways, but at this time the market has decided to print a new structural lows, a new support zone, and retest the previous broken structure. Actually, we have traded above it and closed below it. No? So, and again, the market has synced and overbought, oversold territory. Sorry, today I'm a bit annoying with these oversold and overbought conditions, but we are oversold again on extremely conditions, and the market at this point we have no divergence at all. So we have new lows at RSI, new lows at price comparing the previous bottom, previous structure also on RSI above the most recent. So oversold territory, no divergence, trend continuation. The price needs to go down, okay, and the price keeps falling. So we are trying to search for bullish hidden divergence. So the market now is entering again. It's starting to show some bullish divergence. Oversold territory, pushback, again retest the previous structure support below, and is now with new lows below the previous structure zone, the previous support zone. No, new lows below the previous one, and highs related to the previous structure on RSI. Play, pushback twice. Okay, look this structure here. Nothing happens. We are trading sideways at this moment. Bullish momentum, structure being printed on RSI. Eventually it will go down, so we can start to identify this bullish momentum and start to wait for a push lower. What happened here? New structure highs there, and look what happened at this point. RSI, price, previous structure synced, all synced there, and look what happened here. So the price is trading above this structure here, okay, and above this structure here, and the RSI it's already trading below those bottoms. Okay, let me try to sync this one. So this is like this. This is the bottom of the price, and this is the most recent bottoms. So what this means is the market is starting to print bullish divergence comparing with previous structures. So let me try to identify that with some horizontal bars. So we have here the price retesting previous structure support zone, no, double bottom, new structure highs, pushback, RSI below all those previous structure bottoms. So we have our RSI below those previous structure bottoms. Okay, bullish, hidden bullish divergence. Okay, the price is starting now to print me bullish hidden divergence. I can delete this and let's measure, because almost for sure we are dealing with some 60-on-8 eventually. Not eventually, actually nailed it. nailed the 61.8 at this moment. So the market at 61.8 has started to print me bullish hidden divergence. What it means, in my point of view, we have two options. One of them, target previous structure highs. Above this, I will trade an extension of all this string, minimum 127 extension. This is my minimum. We can use also 1, 2 and clone the previous movement and paste at 61.8 and try to identify the next area. We can use this extension from this movement and start to identify confluence zones between specific Fibonacci ratios I use for this internal wave. I use the 150% extension and the 161, and I try to search for confluence between this movement extension, okay, at the default levels. Okay, let me try to add more levels there. Let me set this at 150, 161, and let's use the 200, 244. Actually, let's ignore for now the 224. Let's use just the default variables for ABCD pattern. Okay, between the 127 and the 200, we can actually validate this as an ABCD pattern. Okay, between the 127 and the 200%. So at this point, the market is starting to show me hidden bullish divergence expectations. We can try, or we can expect the market to retest these previous structure highs. Keep playing the chart. How many times we rejected the 61.8? 1, 2, 3, 4 times rejecting the 61.8. Again, expectations here minimum if you use the structure to trade. Expectations, trade previous structure highs. Keep playing the chart. Tested previous structure highs, pull back. We are now at this moment retesting this previous structure resistance zone. So the market here has printed, I can call a box of consolidation, no? A consolidation box, a period where the market moves sideways, and the market is now retesting that zone. Okay, let's see what the market will print next. New structure highs above the previous one. So we have the market retesting the previous structure, didn't violate this previous structure support zone. So we have no new lows, no. So targets keep the same structure, already filled here obviously, but later we can expect this second target. Keep playing the charts. Look the pressure at those levels. Market felt some pressure here. This is a 12-hour chart, so each candle represents 12 hours of negotiation. So the market at those zones, at that zone, has felt some pressure and pulls back again, retesting previous structure support resistance zone, forming another or reinforcing that zone as now a support now. So if it was a resistance zone broken and it's now a support zone, keep playing the chart. But first things first, obviously, Let me stop here. 200, no. What's happened in between those processes? So the market has printed here that bullish hidden divergence, as I mentioned before, and actually it has printed bullish divergence followed by bullish divergence, I believe. Let me just check. Yes, we have bullish divergence there. So we have higher lows on RSI and we have lower lows on price. So the market not only has shown me bullish hidden divergence, but it has also printed me bullish divergence. So two clear signs for bullish trend continuation. Again, the price has printed new structure highs here, pushback there, retesting previous structure. Look the RSI. Where are we? Below all that structure on the RSI, and by default most of you are already oversold. Okay, most of you, because most of you are not. I don't know. I believe there are a lot of people using the same configuration as I use, but I use the 80s and the 20s, so I search for extremely oversold and overbought conditions or overbought conditions. So at this level, the price testing the previous structure and the RSI trading, let's say trading or printing lows below all that structure, that previous structure, a new clear sign for bullish hidden divergence. What happened before? Trend continuation. This one should violate the previous structure highs. Okay, we have violated the previous one, that level, tested that level and rejected, retested the previous structure, new highs at extensions at this moment. So look what happened here. Look RSI, the strength of the RSI. Look the previous structure on RSI and look the previous structure on price. Look this and look this. Clear sign of bullish trend continuation. Minimum expectations retest the previous structure highs of this small movement. Minimum. Maximum. Let's extend a little bit our expectations, the breakout, and trade another extension level. Okay. So here, this pullback, we have no clear structure, previous structure during this momentum here that allow us to identify the with a clear, at least in this time frame. I believe if you decrease your time frame, eventually we will be able to detect those hidden divergences. But at this moment we have the market printing bearish divergence here. So the market has printed these structure highs and we are now showing some eventual resistance there. Okay, let's keep playing the chart. So here the market has developed into another structure, and again we have RSI printing lows below this previous structure here and the price above it. So the price still above the previous support, so a retest to the previous support, similar kind of, or something like a double bottom, let's say double bottom formation here, or not a double bottom, actually nothing comparing to compare with the double bottom because we need some criteria for a double bottom, but retesting previous structure support and look the RSI below all this structure and the price keeping above. Once the price violates this bearish momentum and we have a few candles here, and obviously you can decrease your time frame, but once the market starts to pull back, we can start to, okay, it goes again, here it goes again, and fast overbought conditions. As soon as the market decides to push back, it has violated this zone. Let me try to push back this. So again, bearish divergence is not sign for a major reversal on trend. Actually, you need to be careful on those hidden divergence signs. So as soon as the market starts to fall, you need to check the strength of your movements and compare it with the price and the previous structure bottoms, and you need to identify those bottoms on the structure. So identify those swings, price action, and once the market starts to pull, you can, okay, the market eventually it will try to consolidate, to print some consolidation period here, 1, 3, 5 wave structure, eventually a more complex structure inside those pieces of data, and well, it will trend higher. Sooner or later it will trend higher. We don't know if the market will push lower, that we don't know. We need to let the market to develop and to print a specific structure, and you need to be able and to be capable to identify those structures, to trade them, not to follow the price. To follow the price, I just need to wait for the price to develop. But to trade them, you need to be capable to identify them in order to predict or to anticipate eventual movements. If you trade breakouts, obviously you wait for the structure breakouts, a retest to that structure, and you engage the market. Once the market retests that wedge, you can trade the breakout. Eventually you can wait for the breakout of the previous structure or the most recent structure resistance zone, and you can trade it above it. Okay, it's a way to trade those breakouts. Eventually there are other ways, but that will require a stop loss below this previous structure minimum. And if you use the fractals, or as example, if you use fractals, you should position your stop loss below at least the second, not to say the third one, but at least the second one, by manuals. Okay, by manuals when trading based on fractals, we need to understand that the market eventually will come to test those previous two fractals on price. So well, but it's another approach. Let's keep that way. So if you trade, let's assume if you trade the fractals, you need to consider one or two fractals, previous fractals, to use your stop loss, or to prevent the market to come to test those fractals, and not kick you out. So obviously I'm talking about situations to hold your positions for trend continuation. So if you engage the market on those structure breakouts, obviously you can use your stop loss below in order to, okay, criterias. If the market decides to pull back inside this wedge again, I'm out of the market. So I engage the market above this previous structure. Okay, I wait for the breakout to happen, I wait for these retests, and once the market prints me a close price above, okay, once the market prints me a close price, a complete candle above this structure, I can buy the market. Obviously that will require a minimum stop loss position below this most recent structure. Obviously, if you are searching for long-term approaches, I suggest to search for the previous structure support zone, or eventually other fractal, with other strong fractal that you may or not have previously. So this is just an example. I don't trade based on this method, but obviously for the best of the examples, in order for trend continuation, you need suggestions, and I believe you can also search other sources in order to get better information related to breakouts, structural breakouts, and how to trade them conveniently and properly, and how to apply a risk strategy behind that specifically method to trade. And because I'm formatted to trade harmonic patterns, eventually I will not help you so much on those matters. Okay, so bullish hidden divergence is just the objective of this video. Obviously, this is just a small approach, but let's assume you are following the price and you start to see the price printing some consolidation and you want to engage the market. You don't engage the market in the middle of this process. Okay, you need to wait for the market or you have, let's say I have an advanced pattern here printed that can provide me an entry in order to anticipate this movement. I'm capable to put my entry point at those levels, but I need an advanced pattern printed there. I can go into a 4 hours time frame and I can search for one eventual advanced pattern here and try to get something from it. Eventually a Gartley pattern, a bat pattern. Not measuring it, but I can search for those behaviors inside the consolidation period. I can search for an advanced pattern in order to anticipate a bullish, a trend continuation. This is a reversal on trend because the market is trending lower, bearish, and this is a reversal pattern, but in order to engage the market in the direction of the major or higher trend. So I try to search for an advanced pattern that allows me to engage the market in the direction of the major trend. So let's get focused again. Hidden divergence. Let's keep playing. The market is now printing highs and we are again very similar as previously. We are again entering extremely overbought conditions. Keep playing. And again, 1, 2, 3 waves. Look this structure here. And look RSI. Starting to show again new signs of bullish hidden divergence. You can use also this 50 line here at RSI, because usually the market will use it as eventually support or resistance pressure zone. So once the RSI approaches that zone, we will see that line as acting as a support and resistance line. So the market is now has actually abandoned the overbought territory. So we are now with 3 waves structure printed. Hidden divergence here, so we'll keep playing the chart. Let's see what happened. And again, hidden divergence, what we expect, retest the previous structure highs. What the market has done, we tested that zone, it has violated that zone, and it has retested that zone, and we are now actually nothing. Actually, there's nothing here unless this small bullish momentum. So a new high, new structure highs, nice bearish candle. We are now at the 50s again, RSI. What happens next? Pause. Market has started to trend bearish. Okay, what happened here? Huge divergence between, let me clear this line there, between these tops and this one. Huge divergence, sideways structure. Actually it has printed, it's similar, it's a 5-wave structure. I will use this. Do not consider this as an Elliott impulse wave because it's not an impulse wave, but I will use it because it allows me to draw here a 5-wave structure. Okay, so something like this. So the market has printed an impulse and then entered into a sideways momentum, and it has violated later that structure. Actually, let me clear this line because it's confusing. So we have our wedge at the tops, and the market has started to come down. And again, look at this. Previous structure support. We are now retesting that zone below that structure on RSI. Look at what's happened next. Head and shoulder. Breakout of the neck zone, breakout, found support as usual, and we have here the market as at this point we have I have no bullish. We are double bottom. We have a double bottom, kind of a double bottom on RSI, and actually it can be interesting. Not a clear one at this time. This time I cannot identify this as a clear sign of bullish either divergence. Actually, we are trading at the same level on RSI, similar as a double top, and not on price, but not with a clear hidden divergence. But let's just keep playing the chart. And again, another example here. Structure, RSI, the strength of the RSI, the price rejecting to print below. Actually, this is just like a reversal head and shoulder, kind of, because I don't like these necks above. I like this. Well, you can consider this one here. Again, breakout of the neck and new pushback, but there we have bullish hidden divergence, price structure, previous support, reinforcing that support zone, RSI printing lows, again expectations, retest the previous structure highs. And look at what happened here. Retest previous structure highs, breakout, retest this previous structure. Where? There. Look at that structure. Not a clear one. Actually, we have no hidden divergence, but it was a very strong strength movement, retesting previous resistance zone at the 50s on RSI. RSI actually demonstrating also some potential for bullish trend continuation, but at this point we have this minimum. Well, we have always this previous structure resistance, okay, because the market has violated that price, and then push back to retest that zone. We have a nice dodgy candle here. This is a 12-hour chart. But we have here a nice dodgy candle for those who search for candlesticks, interesting at below the 50s. Once the price starts to well, we have another bullish candle there and a very fast one next to that one. So, and again, trade above the previous structure. It will be difficult, this one, because this is a very fast candle, a very strong, very strength one. So breakout, retest, wait for the breakout of this resistance zone to engage your trades if you trade breakouts, or try to anticipate that when the price starts to push from or bounce from that zone, or try to identify, if you like to trade those dodgy candles at those levels, you can always try to use them in your favor. If you have a strategy to trade them in terms of risk strategy, if you have a risk strategy to trade them and to support them, why not? So again, new highs, and well, I can stop this because this is actually where we are now, and this is the final step for this video. And again, look left, structure, price, RSI, what is happening at this moment. We are trading at the same level. Let's use this same level expression. We are not, but eventually we will, or not, because we have already one advanced pattern printed there, a perfect one in fact. But we are retesting this previous structure support zone. We have our RSI already below this previous structure and this previous structure. We need to identify this one on RSI too. So this is the structural lows at this point on RSI, on price now, RSI now. So look, the strength, the difference in the previous structure bottoms for this bullish trend. So what it means, eventually we are dealing with another opportunity for a bullish trend continuation. Now it can fail, it needs to reverse at some point, but I need a clear sign for that reversal at the same point. I have well, it seems a clear bearish divergence, as we can see. We have the market trending higher, and at that point the market on the RSI is starting to show some bearish divergence with price. So it was a clear sign for a potential pullback, but at this moment we have hidden divergence presented inside the market. So as previously, once the market violates this zone, it tends to come to test that zone. So what happened here, we have violated that zone, the market failed to come to test that zone. I'm not saying the market will come here to retest that zone, I'm just saying it can happen to see the market to come to retest this previous structural resistance zone. It's what the market do usually, as I showed you before in the other example. So it can happen again. What can happen also at this point, and this is my expectation, is before the market to come to retest this zone, the market can push back and later retest this and eventually this zone. Okay, but I truly believe the market is now offering me an opportunity to engage the market to retest this previous structure support zone eventually, and we can also and based on this specific shape, and this is not a clear shape in terms of technical approach, I will not validate this all the shape as head and shoulder formation, but based on the most recent behaviors inside euro dollar, I will not be surprised at all to see something like an head and shoulder, a broken neck, and a retest to the previous structure highs. And there I need bullish divergence on RSI and a strong signal here. I need to retest this previous structure, and I need bullish bullish divergence. Sorry, I need bullish divergence at this level of the structure of the price action. So, but for that I need first a push, formation of the right shoulder. It can happen from here. Well, I have my stop loss position below those levels, so and because I'm already considering the possibility for the market to develop into heads and shoulder formation. Obviously not very friendly for my bullish engagement if they respect my criteria, but this is my criteria. I need I need actually the right shoulder formation to stay below, to close below the highs of the left shoulder. So I'm trading at this moment this retracement here. So I'm trading the 38% retracement as my default target, first target actually. So, and that's where I start to take some actions. So the 38% retracement, as we can see, is synced with this, but from here, so from where the price is now. So I'm trading from where the price is now. I'm not expecting now the price to push back into these levels because I have an advanced pattern printed there. I don't have the pattern printed below. So the pattern, actually, this is the BAT pattern, and it's already printed at 80% retracement from all these movements here. So there's no room to engage the pattern below because the pattern gets completed at this level. So period. So I will not engage the market below 20 or 25 pips because I lose the probability for the market to achieve my targets if I'm not following the criteria. If the market fail those criteria, I will adjust my position, I will adjust my targets, but I'm not trading anymore the BAT pattern. Okay, to trade the BAT pattern, I need to engage the BAT pattern at 88% retracement. I need to see the price reacting at those levels, and when I need to trade the BAT pattern at 88% retracement. Period. I don't need to extend my conversation on those levels. Okay. At this moment, I'm trading the 38% retracement from all this bearish swing that can print a kind of heads and shoulder formation, and that will, let's say, that we will get a diagonal neck zone. I don't like those neck zones. Actually, I like horizontal necks as the example I'm trying to use here. But I will not get surprised. I will not be surprised if the market prints me this type of structure. So some type of wedge here to retest those levels, eventually to respect these highs of the left shoulder eventually, but it will approach the 38% retracement. So, and I'm trading that on a 4 hours time frame. Okay, it's a 4 hours time frame event. If the market prints close prices below that zone, I'm not interested to stay inside the market. But if the market prints me this head and shoulder formation later, let's assume the market will go to my targets and then will print me this pushback to retest this previous structural resistance, I will not be surprised to see the market later with bullish divergence at those levels, trying to retest the previous structure highs or eventually trading even higher. There are a lot of projections above those prices. If you go into an higher time frame, you can actually get those levels. But let's get focused on the objective of the video. I hope you enjoyed the video. Searching for hidden divergence, looking into the previous structure bottoms in a bullish momentum and trying to identify the strength of the RSI and compare it with the price bottoms of the structure. It allows you to identify not only eventual bullish trend continuation, but also based on actually what the price do. Now, every time the price violates one zone, it comes to test it before goes up again. So this is an example. Previous structural resistance, pushback, broken resistance, it's now a support zone, new resistance, comes below, went below to test the previous resistance again. This is a support, retest previous structure highs, actually printed a double top here, a perfect one in terms of technical approach, double top, broken neck, again retesting these levels, the previous structure support, and again bullish hidden divergence there, bullish trend continuation, always the same, violation of the previous resistance zone, retest of that zone, engagement. Okay, it's always the same process. Here it was not so clear, this breakout, because the market failed to retest immediately those levels, and that's why I will not be surprised to see the price to come lower and test those levels. But this is just pure egg speculation. Okay, I'm just trying to offer you, or to share with you, actually is the best expression, to share with you how I search for bullish or bearish. In this case, I'm searching for bullish hidden divergence. Okay, and it's just an example. So I hope you enjoyed the video, and stay tuned, and well, and keep following, and thank you for those who are following me on the socials, on TradingView, thousands on TradingView. I really appreciate your kind words on my charts. So I hope you enjoyed this. Not so fast, 47 minutes already. So I hope you enjoy, and safe trades for all of you, and have a nice weekend.